Hey guys, it's Krista Tyus here, and in today's video, I want to talk about a lifestyle creep. Okay, and what is that? So, welcome if you are new to me. My name is Krista, and I am an enrolled agent by the Internal Revenue Service. I also help tax professionals, bookkeepers, accountants, CPAs, and financial coaches get more clients utilizing Facebook and LinkedIn. So, in today's video, I want to go over some pitfalls to avoid on how not to go broke. Okay, so quite a few of you already know that I've been there. I've been broke more times than what I like to actually admit, but some of the things that, or some of the lessons learned over the past several years has really helped me to now have greater cash flow, savings, a 401k, my debt, almost all of it paid off, and really being able, really not having money as an issue right now. And so I want to help you guys get into the same position where your lifestyle is far below the income that you receive, and you actually don't have money worries, right? You're actually able to let money pile into the bank. You're able to build your savings, and you're also able to make certain investments, such as in real estate or stocks and bonds, that's actually going to help you bring more passive income. So one of the first things that I learned, and what I have here is my little whiteboard, and excuse the ring light that you can see the reflection of, but one of the things that I've learned is what not to do. It's called the marginal propensity to consume. And so what is the marginal propensity to consume? So it is a macroeconomic term, and it pretty much means as your income rises, so does your consumption, right? So as you make more money, you start buying better cars or upgrading your lifestyle. You start going out to eat more. You start doing all the things that you really couldn't do before your income had rose or had risen, right? And so this is definitely a trap that so many Americans get themselves into. You guys are not an exception. Most tax professionals, accountants, bookkeepers, and CPAs, you guys have money issues too. You aren't immune to getting into debt or making bad financial decisions. And so this actually prohibits you from saving money, and sometimes we're actually making more money. So as you make more money, it's just that our natural inclination is to live better, right? You do want to upgrade that car or upgrade where you live or send your children to a better school, but you really have to watch how much your expenses rise as your income rises. You have to give your income a head start. You have to learn how to get money and just let it sit in the bank and not make those impulse decisions. And so I'm guilty of it as well. I would, it's no secret that I would make six figures plus just within tax season. And I would still be broke come June or July because, I would get all of that money in. But as I was receiving money, I was also paying it right back out, just doing different things, touring Europe or doing stuff like that, buying clothes and shoes, buying all of the designer labels, and I have bought some Christian Louis Vuittons or a Burberry scarf that was like $500, and I bought a Mercedes. And so all of this stuff that I had, it was just taken away from my income. So I had money in, and then I had money right back out. And then I looked up and I didn't have any assets. I didn't have any savings. I didn't have a 401k. I was still in debt. I still had student loans. And that is not the lifestyle or position that you want to be in. You want to be able to be cash flow and self-sufficient, and debt-free, honestly. So this is something that you definitely want to remember: the marginal propensity to consume. As income rises, so does consumption, and you want to keep that in the back of your brain to really check yourself. Is this something that I need at this moment in time? If you're just trying to upgrade your car because you want a better looking car, you just want to be a little bit more flashier, or you want a more luxury looking car, then you really need to check yourself. Do you really need this? Or does the car that you currently have is sufficient enough to get you from point A to point B? Same thing with your living environment. Even me now, I have to check myself. Like so bad I want to buy a home, right? And I have to check myself. Do I really need a 3,000 or 4,000 square foot home right now? Yeah, that would be great. But am I really in a position to, or is that the wisest position to put myself into? Or should I stay in my small little apartment now, continue to save money so I have more money to invest in assets that's actually going to create passive income, such as real estate and stocks and bonds? So it is really going to require you to delay gratification. Okay, the money that you are spending to get the things that you want, it's just so you can gratify yourself. So you have to learn to delay your gratification for later on down the road when you truly have the means to sustain yourself. Okay, now number 2, what I have here is called death by 1,000 cuts. Okay, and this is a Chinese saying. I forget what the actual Chinese saying is, like Linky or something like that. But the Chinese used to torture people, like, I think they stopped it in 1905. But they used to cut off limb by limb, like one by one, and torture people who committed like really heinous crimes such as treason. And that was the death by 1,000 cuts. Now it's just utilized, more so in a financial field, that all of the little things is what really takes you out. It's not the big swipe, it's not the big transaction that really hurts your bottom line. It's all of these small little micro transactions that come out that actually hurt you and your business. So for instance, food is a death by 1,000 cuts. As your income starts to rise, we just tend to eat better as consumers, as Americans, as individuals, right? We are swiping our cart more at, Starbucks or Tim Hortons. We're buying more food because, we're eating well because we have more money. And if you actually pull up how much money you truly spend just on food and entertainment, you will be astonished, right? And actually, this is the homework. I want you to pull up the last 12 months of your expenses. And I want you to see how much of your expenses over the past 12 months was just on food. And I'm talking about coffee, like this every day, like $1.79 or $1, or it's like $2 now. $2 2 times a day, that's $4 a day over a year. I mean, it adds up, right? And so death by 1,000 cuts is something that people, it bewilders them, because when they look at their bank statement, they legit do not know why they don't have the money that they have or that they had. And they can't see it. They're like, oh my God, where did my money go? And I've been spoken to quite a few of my tax clients in the past, and they'll get a big refund, whether it was $3,000, $4,000, $5,000, $6,000, $7,000. And in a few short weeks, I would ask them, what did you do with your tax refund? Or what have you purchased? And they will literally tell me, I have no idea what I spent my money on. Like, well, I don't know. We just know that we lived well during that time. And so when I pulled up their actual bank statements, the majority of their money went to food and drinks. Okay, so death by 1,000 cuts, you have to check yourself on how much money am I spending out with all of these small little swipes. This $2 here, $4 here, $12 here, $20 here. That's the thing that's taking up all of your money. So one of the things that I do is meal prep. So I buy my meals for the week, I buy my groceries for the week, and I meal prep. So that prohibits me from swiping different transactions to buy food or snacks or anything like that, because I already have it. Now, one of the things that I can work on is coffee. Like, can I just make my coffee at home and buy like a mug and just make my own coffee every morning? Yeah, but for some reason, it just doesn't taste the same. And so I still go to Tim Hortons or to Dunkin' Donuts to get my coffee every day, because I just feel like it tastes better coming from them than coming from a little coffee maker or Keurig, okay? But this is something that will kill you. The food, the little expenses. Now, the third thing that I have here is either cut spending or make more money, right? So there's 2 things that you can do. You can either cut your spending. You can look at all of those transactions and cut it by 10%, 10, 20%, right, of of how much money you actually spend on food and entertainment. You can cut that number, or you can just simply make more money. Okay. Now, my proposal to you is to do both: cut spending and try to make more money. So of course you need to be getting more clients, getting more bookkeeping clients, accounting clients, financial coaching clients, whatever the case may be. Increase your income. And also start looking to see where you can cut the fat. You know, are you spending too much money on Amazon? Can you cut some of the subscriptions that you might be paying for? You know, do you really need Netflix, Hulu, and Amazon Prime, right? And Showtime subscription and Star subscription? Like, do you really need all of that? Because that, again, it's death by 1,000 cuts. Those little $12.99 per month, and you have 5 of them, it adds up over time. And so the thing that I like to really remember is I want to control and I want to cut the fat where it's needed, but I also want to look at ways in which I can increase my income substantially. Because one of the things that I learned is that higher income consumers, they're more satisfied in their lives because they've satisfied their consumption level, right? Because there's going to become a point in your life where you're going to make so much more money than what you truly need to actually live the lifestyle that you want. Okay, so there is a point in my life right now where I'm at that level where I actually consume less than my income. And so I'm able to save more money every single month because my needs and my wants are satisfied. Now, but there was a time where my needs and wants wasn't satisfied. Like, I wanted more. I wanted to live life more. I wanted to go out more. I wanted to do more extracurricular activities. But as you focus on increasing your income, you will get to a level in your life where you're making substantially more money than what you even want to spend. And that's when you hit that sweet spot, where you can actually save more money in the bank and actually take that savings and invest it in different vehicles that's actually going to create passive income. All right, guys, so I hope this video was helpful so you don't go broke in 2019. You can actually get control of your expenses, get control over your life, your finances, so you can go on and make better decisions and also help your clients do the same thing. So if you have any questions, drop them below this video and I'll talk to you in the next one. Bye.